All right, thanks for coming to the channel, checking out the video. Remember to like and subscribe. Always, you can drop us a line if you have any questions about anything we cover, or if you want a specific topic done over. In this video, we will go ahead and go over final expense life insurance, what it is, what it does, how it works. All right, so here we go. All right, final expense life insurance is permanent insurance. Okay, now it is a non-participating whole life plan. Now, you might ask, what the heck is a non-participating whole life plan? A non-participating whole life plan is simply a plan that does not receive dividends on the cash accumulation in the policy. It is done this way so that when you own it and you're on various types of Medicare or Medicaid benefits, you won't lose those benefits, okay? Something that we got to be concerned with. So non-participating, i.e. no dividends. If you want dividends, you need a fully underwritten or simplified issue traditional whole life policy that goes through a little bit more rigor, has a little bit more to it. Final expense policies, designed for people with health issues, right? So the insurance companies understand that this is a product for seniors, meaning people 50 and above generally. And they understand that by this point in life, you've been to the doctor, you've had medical problems. You might have diabetes, you might have heart conditions, you might have overweight, a whole myriad of issues. They understand that, they recognize that, it's okay. They're going to take you. Different companies have different appetites for that. Now, so it's designed for people with health problems. Now, it comes with 5 guarantees, 5 promises, right? Five guarantees. I know it's spelled wrong. I can't spell to save my life. All right. First one, it's going to be that the benefits can never be canceled. Right? Never canceled. That's the age to 120 thing. If you live to that old, congratulations, you've satisfied the contract. The insurance company is going to mail you a check for the money from your plan. Right? Now, the next one is that the premium premiums never increase. So whatever the amount you lock your plan in at when you enroll in it or apply for it, request it, whatever that gets approved for, that is the amount that you will pay for the plan. So if you get approved today for a $15, $5,000 a month plan, it's locked in, never going to go up. You don't have to worry about it. You can budget for it. Now, the next one is that the benefits are paid tax-free to your loved ones, right? They're paid out tax-free to the beneficiary that you chose. Now, when I help my clients put plans together, we have at least one primary. Oops. Once again, I can't write to save my life. One primary beneficiary, one contingent beneficiary, and one tertiary. Right? So, primary is the first person that you're going to designate as getting the benefit. So, this is oftentimes a husband, a wife, your spouse, a child, a grandchild, a close friend, something like that. The contingent is the one that you're going to name in the event that something were to happen to both you and your primary at the same time, or God forbid your primary passed away before you did. The last one, the tertiary, is in the event that both your contingent and your primary happen to pass away prior to you, or in a car accident, something like that. So we want to make sure that the people that you intend to have receive the money can have it. That's why we pick 3, or we suggest 3. Right? The next one is that it builds a cash value. Right? So it builds cash value that you can use in the future if you needed to. Say you got no bind for a month and you had to maybe miss a payment. If you get cash in the policy, the company can use the cash from the plan to make that payment for you to make sure the plan goes on. Now granted, this is considered a loan, you would need to pay it back, but it gives you the ability to have that flexibility to keep it there, right? Or if you have an emergency, who knows, water tank blows up, whatever, you got some sort of pressing need for cash. If you have it in the plan, you can borrow it from yourself and pay yourself back, as opposed to going to a bank or a credit card. Right? In this case, yeah, so premiums are locked in, never to go up. Benefits can never be canceled. Benefits are paid out tax-free. We always recommend a primary contingent and a tertiary beneficiary at a minimum. There is no limit. Recently paid a claim with 12 beneficiaries on the policy. Every grandkid. It was cool. Give the kids a nice little boost for college. Now, it also builds cash value. Alright, so those are the guarantees with final expense. Now you may be wondering, how on earth do you get the policy? Alright, so at this point you're going, what's the process, right? What's the process? So the process goes like this. It is insurance, so you have to qualify. You have to qualify medically for day one plans. So that means that they are going to ask you some medical questions. Guaranteed issue plans are available, like your Colonial Penn type plans, they are available. Should that be an issue, should your health be an issue, right? They don't ask any medical questions. Got all the other same benefits, except you get a little bit of waiting period, and I'll cover those in another video. Alright, so you have to qualify medically for day one coverage. The next thing that happens is the insurance company is going to need we'll need your social security number. Okay, it's going to come up on every application request. I haven't seen a carrier yet that doesn't ask for that. Some may ask for your driver's license number, right? They're going to ask for banking information. Okay, so social security number, possibly a driver's license number, banking information. Okay, this is optional on a few companies, but I always recommend you put it on the plan, because if you have a rather common name like a Jane Smith or something like that, or a John Smith, there's a lot of John Smiths and a lot of Jane Smiths in the country, and we want to make sure that we're giving the benefits to the correct person. Social security number is the safest way to do that. Not much different than when you get your Medicare, Medicaid, or your health insurance. Got to have a social, right? So the insurance company is going to need social security number, driver's license, banking information. These are simplified issues, so there is no doctor's or physical exam. They will run your MIB, which is your medical information bureau file. Think of this as your credit score for your health history. So it includes things like the prescriptions that have been billed to your health insurance plan, procedures that have been billed to your health insurance plan, mostly everything that's been billed to your health insurance plan. That's where they're going to get it. That's why this is a simplified issue, and you don't have to worry about having a doctor come or a nurse come or medical records or things like that. Now, if all this didn't work out for you and you know you're healthy, but there's issues with your medical history, a fully underwritten plan is an option, but that's where we're at so far. All right. So once again, got to qualify medically. The insurance company is going to need your social security number, your driver's license number, banking information, and an MIB. Right? All right. So we've got all that. Right? We've done all that. We've satisfied it. We've qualified medically for the plan. What's the next step? The next step is decide when we're going to pay for it and how we're going to pay for it. Right? So plans do not start until first premium is paid. So that means that if you apply for a plan today, get approved today, but decide to have that first premium payment come out in conjunction with your Social Security check on the 1st or the 3rd or one of the Wednesdays, your plan won't actually begin until that first payment is made. So if you want coverage to start immediately, you need to plan to be able to make that first premium payment at the time of application. There are some folks out there who will come to you and they'll tell you that there's a special program, and by signing up today you're covered until the first premium payment is made. That doesn't exist. Okay? And if you have a plan that does that, please drop me a message so I can get set up to offer those to my customers and my clients, because no insurance starts until the first premium is paid. Okay? So the first premium payment paid That's when the plan goes into effect. Most final expense plans will allow you to push the first payment out up to 30 days. Some will go as far as 35. So, what that means today, if you're a senior, you're watching this and you're living on a fixed income, you're surviving on Social Security benefits, you're living on like $1,000 a month, $1,500 a month. That's very common for final expense clients that we help. And oftentimes, if we don't talk right before the start of the month, you've already planned out all of your expenditures with your income for that month. So we often have those start the following month, just because you all understand that when you're dealing with a finite budget, we have to plan for these things. So you can push it for up to 30, 35 days. All right. Once this is done, right? Once that's done and approved, you've got a free look period. Right? This is in all life insurance plans. In pretty much every state. I know it's that way in every state I'm licensed in. Free look period, 30 days. So what that means is that once you receive the plan and the plan is actually in place and you've made that first premium payment, the state gives you 30 days from the day of that first premium payment being made to look over your policy, to read through it and decide if you want to make any kinds of changes, if you want to increase it, you want to decrease it, you want to change it, or you decide it's not what you want after all anyways. So 30-day free look. Now, it is a good idea, good practice, to let two people know that you have the plan, and where to find it, right? You have the plan, and where to find the thing. Here's why that's really important. Lots of life insurance goes unclaimed because the beneficiaries didn't know that their loved ones took the plan out. Nobody knew about the plan, so it couldn't be paid. The insurance company, upon getting notified of the death, if they can find the beneficiary, they will, but if not, they put the proceeds from the plan into a dedicated savings account that accumulates interest until it can be claimed. So the money isn't gone, you just have to find the plan, right? When I help my clients, I ask them for who those two people are so that I can introduce myself. It's also good to have a meeting set up with the agent and your beneficiary, right? Meet with your agent and the beneficiary. Within that first 30 days, that free look period, that way everybody can go over everything. Your beneficiary gets to know who your agent is, knows who to call when you do pass away. They're not freaking out. They're not trying to figure these things out. And they have a relationship so that the agent can help process the claim and get your loved ones the money that you wanted them to have. All right. So that's final expense in a nutshell, as far as how to get it and all that.